connect then with Neeraj Deewan, market expert who is joining in on the show. Hi there, Neeraj. Well, we have seen the final verdict out and the markets clearly seem to be pleased overnight. You did see that rally play out for our own markets. What do you believe that, the long-term implications of this could be for us, and what's the trajectory more importantly? Do we stay in a bit of a range or do we hold out from these levels?
Yeah, good morning. Yeah, definitely. We saw Trump rally yesterday. The markets were doing quite well. And last couple of days have been good for the markets. We hit that bottom. And then after that, we saw this good rally. But then, one thing which has been worrying our markets is the FII selling, which was there yesterday also, and a huge amount that they sold yesterday. So though I'm positive on the markets after the correction, I have a feeling that market may have made a double bottom, and then from these levels, market can be constructive, and there'll be, we've seen the result season, so there've been certain strong pockets which were there in the result season, which may do well and which may continue doing well. But then one thing in the near term that we need to watch is the FII outflow. Whether earlier, we were saying that the FII outflow is happening and that money is going to China, whether that money now keeps on going out, but then it goes to US now because, Trump has been really good for the US businesses and the kind of, the talk that he does about taxation cuts and improvement in business, there's a feeling that there may be some, money getting invested there, further invested there. So the US market definitely can do better from these levels also. So in the shorter term, I'm just concerned and see whether this FI outflow, whether it's going to slow down or what kind of intensity it's going to have from these levels.
Okay, yes, indeed. That will closely be watched out for as to what the liquidity situation is as well for the markets and whether or not that FII exodus continues. But in the meantime, let's get in your take then on individual sectors, and IT seems to be seeing a comeback. What's your sense when it comes to the sector? How have you looked at the quarterly performance and which stocks do you like here?
I think IT as a sector definitely looks interesting. I think that that should do well, and we saw a rally happening yesterday also in the IT stocks. I think the larger, we've seen that the large caps, they do perform, but then the mid cap is where you see real outperformance. But I think these levels, Infosys, HCL Tech, these stocks, and TCS also corrected after the results, and these stocks look interesting from these levels. I think they should do well. And you saw a good rally in IT earlier, then some correction post the results which happened. So I think they have done that, the up move and the small correction. Now again, they are ready, which we saw some indication yesterday. And I think even in the mid cap space, you will have the, LT, the L&T technology and the Tata technology stock. I think these companies should do well from these levels.
Okay, Neeraj, stay with us. Lots more to talk about. Tata Steel, that's going to be on our radar. It's reported a dip in its top as well as bottom line. The revenues have dipped over 1% and the PAT was lower by 13% sequentially. Ashesha is here with the highlights of the earnings.
Well, yes, although sequentially numbers have been impacted on account of lower steel prices in the quarter gone by, Tata Steel has reported better than expected set of numbers. Revenues at about 53,900 odd crores versus expectations of 53,000 crores, and margins have also come in better than estimates at about 11.4% versus ET Now poll of about 9.4%. Remember, volumes were on the higher side and coking coal prices also declined on a sequential basis, and that positively offset the negative impact of lower steel prices in the quarter gone by. As far as Europe EBITDA per ton loss is concerned, that has widened on a sequential basis. It has come in at $72 per ton, in line with expectations, but increase on a sequential basis is what we have seen as far as EBITDA per ton spreads for European region are concerned. Meanwhile, standalone EBITDA per ton has come in much better than what the street was working with, and this is on account of lower expenses. Management commentary on the reason and whether lower expenses are sustainable or not will be keenly awaited. A key negative will be increase in debt. Debt has risen to about 88,800 odd crores, which is an increase of about 8% on a sequential basis. JP Morgan has maintained its overweight stance with a target price of 180. They expect the stock to react positively on account of strong beat as far as numbers are concerned, and they do not see any negatives from the numbers this time around. Morgan Stanley, meanwhile, is also maintaining its equal weight stance. 175 is their target price. They believe management guidance on domestic and international business and the guidance on spreads for the second half of the year will be keenly awaited. But all in all, strong set of numbers. Management commentary in terms of debt and guidance for the second half of the year will be crucial now.
All right. Yes, indeed it will. Thanks so much for giving us that heads up. Neeraj, wanted to get in your take then. How are you looking at the performance from Tata Steel in terms of their numbers? A dip in the top line as well as the bottom line, and the margins as well have narrowed. What's your take?
Yeah, I think the numbers were better than expectation, though expectation was not too high for the numbers. So I think India business did well for them on the margin front. But I think top line, as you rightly said, we didn't see any improvement there. And again, Netherlands and UK are a concern, and even the debt levels have gone up. I think we should watch and see what the management commentary is about the future outlook on the debt part and the UK and the Netherlands business. Though, the stock has not done too much even after you saw the China news coming in. Other metals have done much better than what Tata Steel has done on that front. I think one should wait and listen to the management committee, taking a fresh view from these levels.
Neeraj, so what is a Trump trade? If I may just look at a very simple trade, that there was a Modi trade, which is in 2020 or 19, if you bought into defense railways, that turned out to be the best Modi trade. What is the Trump trade according to you for the next couple of quarters?
Yeah, hi, good morning, Nikunj. Yeah, one simple answer would be that technology stocks, IT space should do well. If US businesses are going to do well and there's an outlook for them to do better, I think technology, IT is one space which can do better from these levels. Then besides that, there is the China tariff news which keeps on coming when Trump is there. So if he's going to put more tariffs on China, then the other sectors which like chemicals and textiles, which are export oriented from India, they may get some advantage there. So I think one should look at chemicals, IT space. These stocks, I think these sectors can do well from these levels, depending on what news flow comes from what is happening in US.
Fair point. GIFT Nifty has managed to bounce back. It is in the green. Kunal, the combination of high yields, high dollar index is bad. When this combination happens, India underperforms. Have you looked at chart in that orientation, that when dollar index goes higher, when yield it goes higher, what happens to emerging market and what happens to India? Is there a correlation mathematically which we can talk about?
Yeah, historically it is there. Historically, when dollar index has rallied up higher, it's actually negative for many of the emerging markets, including our markets, on correlative basis. But then theoretically, Nikunj, what over the last 2-3 years, from 2022 September, I think that was a point where the dollar index made a top. But our markets, had been rallying even after dollar index had one phase making a major top, and there was a point when the dollar index rallied up higher, but our markets continued to move up higher. So somehow in the last 1 or 2 years, the correlation has not worked out exceptionally well. So in an ideal scenario, we expect an 75 to 80% correlation with this kind of a data point when the dollar index moves up higher, and this 100 to 105 plus mark where the dollar index is right now, it's a very substantial jump in the context of the global equity markets. But somehow that's not played out for our markets recently over the last 1 to 2 years, and that could be the only reason why I would probably believe that maybe trying to recouple back into this kind of correlative mode could take some bit of more time. So we need to see more evidences that the dollar index is consistently moving up higher, and that's creating a cause of an impact or a selling pressure for many of the emerging markets. So I think that could be the only cause of concern as of now. But yeah, I think what could also happen is that we've seen this correlation that dollar index, or rather when the crude oil prices get back into a correction, when dollar index prices rises, that's a definite impact towards the bullion asset classes, and that's why you've seen in the last, I think, 4-5 days or so, not just yesterday, but over the last 4-5 days, we've seen a very sharpish kind of a correction coming back into gold and silver prices on a dollar basis. I think we hit 27.89 on the dollar prices for gold, and we are almost at 26.59, and on the silver we were almost at $34-35, and we've come back to $31. So that's a very sharp kind of a correction in the last 4-5 days.
Meantime, Vaishali, let's get in your take on the mid-cap IT stocks that were buzzers in trade yesterday. KPIT Tech, Zensar Technologies, Persistent. What are the charts indicating?
I guess overall, full IT sector was showing a good strength and especially post these results. So I would say yes, individual stocks. In fact, even if you see Intellect, uh, Keynes Technology, all these are searching very high. KPIT post its result fell off pretty well. So I guess for now it's just a bounce back. But there are certain stocks like FSL, First Source Solutions, and Keynes. So these are the stocks which are continuing to get into new highs and showing a lot of strength. So I guess individual stocks are to be looked into rather than the whole pack altogether. But Persistent, Coforge, if you see, they are heading towards higher levels. So these are the stocks which one should really focus on to be bought at every decline.
97 points lower, that is what implied GIFT Nifty is indicating, which is where we actually should start. Let's look at the Nifty close and futures close, which in a sense would be important for us to use for benchmarking purposes. That's Nifty yesterday closed at 24,484, 24,490, which means Kunal will start flat.
Yeah, so I think 590 is where we closed yesterday on the futures. We were at a 100-point premium, 90 to 100-point premium. So the spot was around 484, 485.
Flat, I mean 70, 80 points here or there.
Yeah, 70, 80 points is flat because after a 270 points rally yesterday, and then the one day prior we were almost at 120, 130 points rally for the index. So netted a 400-point rally. You are expecting that the markets could trim off some of the gains and come back into a stable territory. So I don't believe that the 70, 80 point is a huge impact on the negative side.
Neeraj, broadly, what's been your portfolio strategy? Are you fully invested in this market, sitting on cash? If yes, why and when would you use it?
Yeah, actually, we had sold some of my stock earlier because market's valuation is pretty high, and there was definitely some concern building on the valuation front. But in the last about 7 to 10 days, that money has again been deployed. So I can say that most of the cash which was generated, though there will be still some 10% cash, but most of it has been generated because market gave good corrections, whether it's large cap, mid cap. There was definitely this time we felt the correction also because last year also we saw similar correction playing, but this time the large cap and the small cap corrected more than what we saw last year around Diwali. So I think so the money has been already invested, most of it.
Okay, fair enough. Meantime, yes, indeed, metals are in the spotlight and Hindalco will be in focus on the back of the subsidiary Novelis' Q2 numbers. Let's take it across to Ashesha, who joins in with all the highlights of the earnings. Ashesha?
Well, yes, Hindalco's wholly owned subsidiary Novelis has reported largely in-line set of numbers, but outlook is on the weaker side as far as demand environment is concerned, and that could be a bit of a concern on the stock today. As far as numbers are concerned, net sales have risen by 5% on a year-on-year basis, led by higher shipments and higher aluminium prices on a year-on-year basis. Shipments largely in line with expectations, but they maintained their volume guidance of 4% growth on a year-on-year basis in line with industry growth. As far as spreads are concerned on a sequential basis, European region there were floods in Europe and that impacted spreads. So spreads this time around have come in at $489 per ton, a decline of about 6% on a year-on-year basis and 7% on a sequential basis. So that's a bit on the weaker side, but largely in line with what the street was working with. As far as EBITDA per ton guidance is concerned, management has decided to withdraw its near-term guidance of $525 per ton, and they believe that jump in scrap prices could potentially impact spreads going forward, although they are retaining their long-term guidance of $600 per ton. As far as outlook is concerned, as I mentioned, it continues to be on the weaker side. They say global beverage can demand continues to remain strong, but automobile demand from North America region and European region is on the weaker side and perhaps could impact volume growth going forward. But all in all, in-line set of numbers, but outlook is on the weaker side. So management commentary on this will also be keenly awaited.
All right, thanks very much, Ashesha, for giving us that heads up as to what Novelis's quarterly numbers were like. Meantime, let's get in a take on and take a look as to what the outlook is when it comes to the brokerage notes. CG Power, APAR Industries, and all of these T&D players are on Nomura's radar. They've initiated a buy, saying that this is a multi-decade growth story and that we are seeing globally as well a lot of the regions like North America investing heavily in transmission infra. Wondering, Neeraj, if you have a take on some of these counters?
Yeah, actually, this is more to do with the semiconductor space also, rather than a pure, something like CG power can be looked at based on what is happening on the capex they're going to do for the semiconductor space. So I'm generally constructive about the power segment. I think the transmission space should do well. You've seen the companies, the mid-cap companies also in this category have done very well over the past a couple of years. But then, valuation definitely is a little concern still there. But some of them are still trading at a healthy valuation. So I would rather be very, very stock specific there. If I get some opportunities, then only I'll look at the sector.
Okay.